Thanks for joining us at XM.com for this Forex Preview. We'll be having a look at Eurozone CPI coming up this week. I'm Christina Marujas, and joining me today is Rafi Boyajian, Lead Investment Analyst. Rafi, the euro will step into the spotlight early this week as we got the flash inflation estimates for the euro area coming out on Tuesday. The consensus forecast is for the headline rate to jump to 2.8% in August, which is well above the European Central Bank's newly reviewed target of 2%. If we do see such a large increase in Eurozone inflation, do you think it would worry policymakers at the ECB?
Well, Christina, it's certainly expected to be a bit of a spike in inflation for the euro area. So the headline rate is expected to come in at 2.8%. So that would make it the highest since December 2011. And underlying inflation is also expected to edge higher, but remain well below 2%, at least for the time being. So although on the one hand, this is good news in terms of the ECB finally making good progress towards its newly revised symmetric target of 2%, the increase is likely to be transitory, as we've been hearing from all central banks. We're likely to see inflation continue rising until the end of the year, but then to fall back in early 22. So policymakers won't be worried about inflation running well above their target just yet. In fact, their new forward guidance specifically states that inflation needs to be at 2% sustainably. Not only that, but for underlying inflation to be also rising towards 2% before they even think about raising interest rates. So they really raised the bar when it comes to hiking rates. And under this new guidance, they also don't need to rush with tapering their asset purchases either, or at least some would see it that way. In fact, we did also hear from the ECB's chief economist over the past week, who hinted that the ECB isn't planning to beginning taper discussions at their next meeting in September.
Now, the euro has had a pretty dreadful summer, but seems to have found some footing against the dollar over the past week. Can we expect higher inflation to provide some further lift to the struggling single currency?
Well, the euro is mainly being driven by the divergence in the monetary policy paths of the ECB and the Fed. So if the data is more or less in line with what ECB policymakers are expecting, then at best we should only anticipate a knee-jerk reaction in the euro from the data. The main thing to note is that even if inflation does come in a bit more strongly than the forecasts in the next few months, and the ECB were to begin tapering in December or perhaps even sooner, interest rates in the euro area will probably won't rise for many years, and that will keep a lid on the euro's gains. The ECB's criteria for raising rates is much tougher now following their strategy review and overhaul of their forward guidance. Now, some may argue that the ECB will try to compensate for this overly dovish guidance on interest rates by tapering much quicker than expected, but that would still mean that the Fed is almost certain to raise its rates much sooner than the ECB, which means the outlook for the euro dollar won't improve until we get to the point where the ECB is ready to begin hiking rates, or the Fed delays its own planned rate hike path.
Rafi, thank you for joining me today, and thank you for watching this Forex Preview here at XM.com.